Welcome back to Morning Trade Live. Let's focus on the semiconductor space. Joining us now is Matthew Bryson, Senior Vice President of Equity Research at Wedbush Securities. Matthew, thanks so much for joining us. Let's start by talking about Intel. Investors making it pretty clear that they're happy with Intel's report last night. Shares up more than 10% right now. What's your take on Intel's earnings?
Yeah, so I think in part the reason shares are so strong is Intel had a rough couple days heading into earnings. Clearly, the PC numbers were much better than people expected. That also lifted their guide. Having said that, when I think about Intel as a longer term investment beyond the quarter, it's not PCs recovering that are going to make it a worthwhile investment. It's them executing on their longer-term roadmap to get their manufacturing back where it needs to be. They made some positive comments around how that effort's developing. At the same time, the products that rely on that effort, they really only start to come out late this quarter, and there's a ramp through 2025, and I think that's really what they need to get right for Intel to be a worthwhile longer-term investment.
All right, so unless you've made any changes, I was just taking a look. You have a neutral rating on Intel and a $35 price target. It's trading at $35.98 right now. So you think it's achieved all of its upside potential at this point?
Yeah, again, the thing I've really been waiting for is some proof that they've gotten past the manufacturing bugaboos that have weighed on them for the last 5 years, and it looks like we should start to get that as we head into next year. But until those products come out, or until I start to hear from customers that they're seeing really great performance from Intel chips that they're going to release in their products that going forward, it's a bit hard for me to say that they've turned around the problems that really caused their slide over the last 5 years.
So, Matthew, what about Nvidia going after the PC market? What could that mean for Intel? How big of a threat could that be?
So whether it's Nvidia, whether it's Qualcomm, who just announced their new ARM chip, whether it's AMD, where there's speculation that they're also going to come out with an ARM chip in 2025, that's a concern. Now, having said that, if Intel can get their manufacturing process right, that allows them to have a higher performant or more power efficient or cheaper semiconductor than their peers. Or if they can't get the chip design right, they can act as a fab for Qualcomm, for Nvidia. So I think it is certainly something to watch, and it's a concern. But at the end of the day, from my perspective, it all comes back down to, can Intel get its manufacturing efforts in the right place, and then has a bunch of levers, a bunch of opportunities that it can use if something goes wrong with one of its businesses, unlike right now where, again, its fortunes seem to be predominantly dictated by whether we're in a PC pickup or PC downturn.
Okay, and then talking about AI potential, this is a group that the more impact or the more exposure, I should say, you have to AI, the better off you've been in terms of stock market performance. Obviously speaking mostly about Nvidia there, but just in terms of potential there, how much more potential does this AI wave have, or do you think that it's starting to be priced in at this point?
I think that potential is the right word. And so I think what we're seeing right now is there is still more capital investment over the next 2 quarters, or increased capital investment over the next few quarters, that it's going to buoy Nvidia. I think that AMD, that they are working with a number of hyperscalers, that they will see some traction in 2024, and that they're arguably second place in terms of third-party alternatives to what the cloud providers are making themselves. The difficult piece is I think a lot of what we're seeing is kind of add-ons to existing applications. Was recently had the chance to attend a speech given by one of the Microsoft executives, and they were talking about the fact that at some point we're going to see the next Uber, the next Instagram, built on top of a platform like OpenAI. I think that's what really generates that next wave of demand. But no one envisioned Uber before Uber existed. No one envisioned Instagram before Instagram existed. And so it's going to take a bit of time.
Okay, so more potential, but certainly some headwinds, that these chip makers are facing, including U.S. government restrictions. So at this point, when you look at the group as a whole, would you say there are more headwinds or tailwinds for the group?
I think it's a big mix, right? So PCs appear to be getting better. We got great numbers from MediaTek this morning. So arguably, Android handsets are finally picking up a bit. At the same time, enterprise spend is off a bunch. You've got concerns around what the macro looks like, and so I think it's a mixed bag, and it depends on where your exposure is, as to how things are going to go, and also to some extent what happens with the macro in picture in 2024, and that's a bit of a black box.
So given the mixed bag, which chip makers would you be comfortable buying at current levels?
So the names that I really like here are the memory names. So whether it's Micron, whether it's Western Digital, whether it's something like Silicon Motion, and there it's in part, all of those vendors are very much exposed to PCs. They're very much exposed to handsets. But even more importantly, they've rationalized production over the last few quarters, such that right now, when we're seeing the demand pick up for some of these products, they don't have enough chips coming out to necessarily satisfy that pickup in demand. That's resulting in pricing lifting into Q4. I think pricing is going to lift into Q1. That not only boosts revenue, it also adds to it also goes directly into gross profit margins, flows down to earnings. And so I think you're going to get better numbers at those memory names that really struggled with profitability over the last 3-4 quarters.
All right. Thank you for those picks and your chips expertise. Matthew Bryson, Senior Vice President, Equity Research at Wedbush Securities. Thanks again.